Welcome back. Confidence within corporate South Africa has continued to improve. In July, the SACCI Business Confidence Index registered a slight rise to 109.1 points, building on from the uptick noted in June. Joining me now to unpack the factors that are boosting sentiment is the president of the South African Chamber of Commerce and Industry, Mtho Xulu. Mtho, thanks so much for your time today. So I guess a political story here, more certainty post the national election and the formation of the government of national unity, just boding well for sentiment, right?
Yes, good afternoon. Thank you very much for having us. Yes, it is a political economic story in the sense that largely the confidence has been carried by the outcomes of the general elections that took place in May. So what we saw before the elections is that it was a steady decline in the confidence starting from January. But since the announcement of the results and the ultimate formation of government, we found that business has stabilized and its confidence has now been on an uptick in the second month in a row.
Now, zooming in on the print, 6 of the 14 sub-indices impacted BCI negatively. 4 had no effect and about 3 had a positive influence. Just walk us through some of the pressure points, seeing that most indices were in the negative.
Yes, certainly it goes back to, in essence, that most of the confidence now is driven by sentiment that happened in the public arena, and the economy remains under pressure. And you will see that by the fact that imports and exports are down, as well as manufacturing itself. So the only increase in the month-to-month was actually around the areas of the share price stabilization. You would remember that the currency itself had a good rally after the elections, as well as domestic vehicle sales. And vehicle sales also just give you a sense of consumer confidence and the individual's confidence in the economy locally. So it is really just early days, which is confirmed by consumer activity and the stabilization of share price. But unfortunately, the real economy is still under pressure. And that's why we really have to see these structural reforms and the commitments on inclusive economic growth that came from the government of national unity really taking root, because this confidence can only be sustained by real economic activity around manufacturing, infrastructure development, and obviously the growth of other sectors.
This brings me to my next question. I wanted to touch on the factor around the new vehicle sales and how that also just boded well for confidence. We also saw the NAMSA print coming out for new vehicles, also in positive territory for July. How sustainable is this? I know that, rate cuts are on the horizon and general consumer confidence has somewhat improved. But we've also been seeing a shift from consumers where they are buying more second-hand cars than they are buying, new vehicles.
Yeah, so this kind of this indicator actually talks also as well with our other index, which is called the trade conditions expectations. And what you would know that in the market for the rest of the year, starting from maybe one quarter ago, is that interest rates are stabilizing and potentially going to drop. So yes, consumers are probably now in a place where their incomes are stabilizing and potentially inflation itself is on a bit of a decline. So hence the ability for people to start enjoying consumer products. Yes, the shift has also moved away, obviously, from new vehicles to used vehicles, but also from certain brands to other brands that have come into the market that are also giving high levels of luxury at a lower cost. So I think the competitiveness of the market in the vehicle space and the range of opportunities are giving South Africans different options. So it's no longer the big brands competing with second-hand vehicles, but you also find that new vehicles with better features and that are more cost-effective are actually giving South Africans an opportunity to participate in some of these acquisitions.
Let's talk about overall growth now. How do we get to a point where, morale really starts translating into growth? I know you did touch on economic reforms, and that's just starting to play out from the government of national unity. Just looking at what we've been seeing right now, we are seeing upbeat morale. We are seeing, some changes taking place within SOEs. I mean, we haven't had load shedding for about 4 months now. But when you look at, the different sectors within the economy, the mining production numbers downbeat, the manufacturing numbers, a slight uptick, but, not really reflecting a positive number for GDP growth, or rather the GDP print for the second quarter.
So towards the close of the sixth administration, one of the reflections that we made was that the previous administration had lost a lot of opportunities to grow the economy because we were not actually able to implement a lot of our work quickly enough. So what you're seeing with the government of national unity, we have different parties who are coming together, and one hopes that you'll have a lot of checks and balances because you have different people from different perspectives coming in and actually committing themselves to one goal. And that will mean that we'll have to be very decisive in terms of our priority sectors, the policy intervention that we need to follow through on, and holding those in government openly and sustainably accountable. Because previously, when you had the dominance of one-party system, for instance, you would have a lot of delays in terms of accountability. So what we are hoping for now is that we'll have priority sectors that will be staffed with meritocracy and a lot of accountability around the priority sectors. Priority sectors meaning that you have to have things such as the infrastructure working, like you mentioned, Eskom is turning around, Transnet still has a long way to go, but it's facing in the right direction. We also are impressed that the president now is expanding partnerships with the private sector to look at how do we stabilize municipalities, because a lot of businesses are single location businesses that have to be supported by systems in the municipal areas. And when you look out, obviously the DTIC now talks a lot about a deepening culture of industrialization. So if you can focus on all these major priorities that would unlock the economy and have speedy accountability and speedy implementation, I think that will actually see us seeing growth at least by the midterm of this seventh administration.
That just brings me to my next question. How does then business confidence, business morale feed into investor sentiment? I mean, you spoke about how we are seeing increasing public and private partnership, but we can't forget that we are seeing some companies exit the country or choose to, ditch investment within the country. We saw Total Energies exit its gas project in Eastern Cape, not totally leaving South Africa, but I mean, that is a point of concern. We saw Shell earlier in the year also, ditching that downstream business. We also had BHP when it was making its bid for Anglo-American, kind of exclude those SA assets. How do we get to a point where we are back to, the South Africa that is attractive to investors?
Yeah, look, what we need to do and do very quickly is to get our priorities right as a country. I think some of these companies that you mentioned would have left South Africa for different reasons, but the common denominator, they will actually be calling for policy uncertainty. So what we need to do in this administration, we need to be clear about what are the priority sectors that you want to focus on, what is the role of each stakeholder, and how do we monitor policy so that it does not become interruptive to business activity. Because sometimes some of these opportunities are caused by clashes among stakeholders. So I think once you put up a clear vision for a country and you are able to resource it properly with the right people and have the right conversations and the right narratives being publicized to all the stakeholders, you eventually start crowding in a community of investors who say, here is a country called South Africa. They have their priorities right. It's well resourced, and the policy is coordinated in such a way that you don't have a clash among stakeholders. If we can build that, at least in the first year, we could see in the subsequent years things coming together. Because some of the companies are just discouraged when you have stakeholders at each other's throats and policy that is highly conflicting and eventually leading to an environment that people don't feel safe with their investment, especially long-term investments such as energy and infrastructure. So we have to get our priorities right. We rather focus on a few, but make sure that we follow through on all of them. And in that way, over time, with our global activism, we can actually start attracting a lot of people into South Africa, because South Africa still remains a highly popular country, but obviously, if it doesn't produce the goods, people will not come. So we must still ride the wave that we have good faith globally, but we also need to start showing that it's profitable to operate in South Africa. And that means that our priorities must be right and our coordination must be impeccable.
So government needs to just put its head down and work. Mtho, thanks so much for joining us and just sharing your insights on the SACCI Business Confidence Index. That was the president of the South African Chamber of Commerce and Industry, Mtho Xulu.